all signs point to an interest rate cut when the Reserve Bank meets next month. This week, the US Federal Reserve has held rates steady, and in Europe, the central bank has slashed rates for the fifth straight time. This is since June of last year. And joining me now is Economics Chief Warren Hogan. Warren, great to see you. You get these things right. So when are we going to see a rate cut?
Well, if you're listening to the market, we're going to get one in a few weeks. It is fully factored in. And of course, this is real money, people putting on real positions. So we have to take this seriously. The RBA shifted away from being hawkish in December, and then we got this softer inflation number. That's what's got the market going. But are they going to do it? I think there's just as much of an argument to be cautious here, because although inflation's improved, it's still too high. And there's still some question marks about whether it's going to keep coming down and stay down. And that's actually the condition that needs to be met to get the RBA cutting rates. So, look, I think I wouldn't be cutting rates at this stage of the game.
Okay.
And I still think there's a chance they won't. But, you know, when it's on, it's on.
If you were on the board, would your argument be to wait until April Fool's Day or later, and why?
Well, at this stage, what we're seeing is the actual economy is improving. So we saw a big lift in consumer sentiment at the end of last year. That seems to have held through the summer. Retail sales are starting to rise again on the back of the tax cuts and, of course, this strong employment growth. So you got to remember, inflation now reflects what happened in the economy in the past. And what the RBA is worried about is inflation in the future. And of course, this improvement in the economy suggests that inflation may stop falling and could actually get worse. And that's exactly what we're seeing in the US. And that's why the Federal Reserve has stopped cutting rates.
Okay.
When we thought, and they thought a few months ago, that they'll probably keep going all the way down to 3%. But they've stopped cutting at the rate we're at, which is around sort of 4.25%, 4.5%. Because their economy is proving resilient and inflation is proving sticky. So I think that's a cautionary tale for the RBA board. I don't think there's actually a case for a rate cut at any stage in the next little while. We may get there by the second half of the year if the economy remains well behaved and, of course, if inflation keeps falling.
Warren, there's always a bit of a commentary effect, isn't there? Just the fact that we're talking about it, markets are pricing a cut in, that changes people's behaviour anyway, doesn't it?
Oh, it does. And at this time of year, it's critical, particularly for the housing market. You've got everything from a whole bunch of new people wanting to sign leases and get rental properties through to people wanting to sell and buy properties coming out of the long summer break. So this is a godsend for the housing markets because the RBA hasn't got any more public communications. All the economists are calling for a cut. So that's going to be the talk all the way through. So this is going to have an effect on those markets. And look, it may have an effect on consumer sentiment and spending. It's probably not what we want to see right now because, as I said, I think we're seeing evidence of this improvement in consumer spending coming through, and that was the soft part of the economy in the last couple of years.
Warren, from what you're saying, the RBA should hold. I mean, they're not impervious to the commentary and the political pressure that is now coming to bear in an election cycle, with an election due sometime, you know, in the next couple of months. I mean, can they really hold the tide back?
Yeah, well, the political pressure is intense. It's like nothing we've seen in the last 30 years. And I think we've got to be clear, it's not, you know, the Treasurer or the Prime Minister putting pressure on them as such. It's this idea that they're going to take the blame for anything going wrong in the economy, which I don't think's the right way to sort of be positioning it. And I don't think it's fair on the independent Reserve Bank. But that's the real political pressure. If they don't cut and the economy goes poorly, then they're going to cop the blame for it. So that's what they're feeling, and that's what the board will be feeling. But then they've got to do their own analysis, which they do, and they've got to have their view on the economy. And I think the RBA economists are going to say the economy is actually holding up, because the end question that the board has to ask themselves is, what will a rate cut achieve? Because the whole objective is to put more employment and more inflation into the economy when you cut rates. And at the moment, we've got plenty of employment and we've got too much inflation. So that's why I think they'll hold and why they should hold, but the political pressure is pretty intense.
Would it be unusual for Michelle Bullock to come out at the February meeting, no cut, and say, look, we're not cutting because of all those reasons you just stated, Warren, but we're, you know, a very high chance to cut at the next meeting in April 1. Can she foreshadow things like that or not really?
Well, it's dangerous, and we saw that with the previous governor, where it was a big foreshadow. It was, no rate hikes for 3 years, but
We remember that.
yeah, no, look, I think they've learned, and particularly Governor Bullock has learnt that, you got to keep your cards close to the chest. The thing that these central banks do, all of them, is that they've got to predict the future and make an assessment of where we're going. And of course, that's inherently, we don't know the future. So I don't think they'll do that. If anything, what Governor Bullock has been saying now for a while is that at some stage in the not too distant future, we may be in a position to take some of those rate hikes back and cut rates. But not putting too much definitive time horizon on that. And I still think that time horizon is the second half of the year. I've got a rate cut penciled in for November, and I still think that's the right timing.
Great to hear from you, Warren. We just have a couple of weeks to find out. Great to talk to you.
Thanks, Laura. All the best.